Understanding value, not price. It was one of the first concepts I really sort of learned with profile is price is one thing. Whereas if you look at it from a value perspective, that says to me, well, people have panicked here. And unless more people agree with them and continue to sell it, it's not likely to stay there.
Welcome back to NinjaTrader Live. We have Richard Bailey. How you doing, Richard?
Very well. It's a new thing for me. I'm looking forward to it. Yeah, so I started 2007 from school. I was like, I want to be a trader. Came out of university, tried to find a job as a trader, and kind of realized quite quickly that if you want to be a trader, actually doing the trades, you need to go and work in a prop firm, not an investment bank. I went down the route of getting into a prop firm, got backed, went live beginning of 2008. So baptism of fire, but a great time to start in the sense of just opportunity. I think every trader has a realization of, I can actually do this and make a living out of it. That was the kind of moment by the end of 2008. From then on, went forward with all the volatility. It was great. Where I found things really tough, and I think this is something that all traders experience, was 2012 to 14. And that was a real big period in my career of a sort of realization that you've got a long way off a few limited things without actually really understanding what's going on. Volatility's high. You've got constant opportunity. That's what brought me on to a far more sort of technical approach, far more profile orientated approach, more of a sort of holistic approach, if you will, of where exactly do I think a market's going today, rather than the original approach, which was setup, trade, news, trade, event, trade, click, 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 scalp, scalp, scalp. That then sort of all changed when she realized that, well, volatility goes away and you've got to deal with that somehow. I saw so many people leave the industry during that period. Not a nice time for a lot of people.
So now we're talking about market profile, right? You mentioned profile and how that kind of helped you understand your holistic moment, your eye-opening. I call it taking it to the next level. You're not reacting, you're not just trading, but you're seeing the playing field a little bit better. Maybe we can show the charts.
I'll start off with crude because I think crude's a more simplistic example of managing your expectations. I saw you guys talking about it at the beginning, how oil, very much like the previous day, essentially went for it off the open. Oil, incidentally, for anybody wondering, is the chart on the left. It starts dropping. It did the same again today, and it looks really, really aggressive to the downside. And this was one where, certainly for me, a profile perspective just gives you that moment to step back and go, wait a second, how much more downside do I really think's in this? And I'll explain why I had that view.
So for those of you who aren't familiar, just real quick, market profile is a type of chart. You're using Tradevate charts, right? Is that correct?
Yes. So you've got Tradevate profiles.
Exactly. So profile is a way of recording trading to form a volume distribution over time, but it isn't really done in a normal way. It isn't actually every trade. It's about when something trades within a price area, we put a letter to designate which half hour of the day that price traded there.
Precisely. So it kind of builds up. And the idea being, it shows you where value is. I think that's a really important, it was one of the first concepts I really sort of learned with profile is understanding value, not price.
Yes.
Because price is one thing. Market drops really quickly and you think, oh my goodness, it's dropped 100 ticks. Maybe this means it's going to keep going. Whereas if you look at it from a value perspective, you can say to yourself, well, there's been no shift in value. So essentially that says to me, well, people have panicked here. They've sold it. And unless more people agree with them and continue to sell at these lower prices, it's not likely to stay there. Now, the sort of big thing with oil today that I was looking at, and it all comes down to, and I'll bring an hourly chart in because I like a volume profile over a period of trade as well. But the bit that I was really interested in is these single prints here. Single prints are basically where you've had one very straight line move over a short period of time, and we've not then traded back. It's also an area of very little volume. So what this generally suggests to you is there's no value in here. So if you fall into the single prints, and this coincided really nicely with breaking yesterday's low, this is a cash session only. So for me is 2 p.m. till 7:30 p.m. 8 till 3:30 Eastern. Once you got this drop down here, I'm looking at this area of light volume, taking you down to around about 98. And this to be the area where effectively, and this is where I think profile is really valuable, I expect it to get stuck and spend some time here, put some volume in here. You know, I always think profile, it kind of fits itself back together. So if you've got an area of very little volume, it's likely to get filled up. Now, the thing that profile doesn't tell you is how it's going to fill it. the sort of sequence of the way you fill it. So if you imagine the obvious thought is, well, you drop down to the bottom, back up, back down, back up, like you're coloring something in. It doesn't have to do it like that. And that's exactly what it didn't do today. The bit where it then helps you actually trade it is not losing sight of the potential. Once you've dropped down here, don't get me wrong, this was a really easy one to have a go at buying it from sort of these previous highs down at 95, previous areas where we've got that little build out of volume. Real easy one to get caught buying it and it not bouncing. And it's one where you have to sort of maintain the idea of this can still balance in this way. What it helps with is not getting sucked into selling it and selling it and selling it still. Particularly noticeable if I bring you in an hourly chart. This is the profile of the entire move up since the Iran ballistic missile threat. This is another area I'm a big fan of using profile for, to see once you've had one move, where you're going to get stuck or where you can accelerate on the move back down. So my view is that areas of high volume, we're going to accelerate through, which is what you get here, and then hold below. And then areas with a lack of volume, you get stuck inside, which is essentially what we're doing today. So that was my sort of big thinking on profiles on oil. The idea being then that once you have got down towards these lows or this sort of area down in the mid 90s, if you get the opportunity to play something back up, and you got this post the data. I heard you and Mike and Bobby talking about the data on the oil and the API correlation. And it was once you got the data out the way, that gave you the move back up into this range, which was then where you could actually play it towards the other side of the range, play it back up, simple targets. You're going back to the other side of where we're lacking volume up to around about the 70s. Now it has extended. Don't get me wrong. That's not part of this trade idea. And it's something that I think you have to look at and go, look, I'm going for 70. If it gets there, I'm out of it. I've got exactly what I want. Just before I came in here, one of our traders actually played it from around the mid-20s, but as it had that little pop up at around 70, he gave that one up. Decent day for him because he did it on 100 lots. So,
so Richard, there's something I want to clarify, which is, great explanation of what to look for market profile. First, I just want to explain that each area that you see here is one day. So we're looking at right now, the most recent day is exactly where Richard is highlighting now. Something we talk about, Richard, we use volume profile, which is similar to market profile. And I think you have volume profile charts here as well.
Yeah.
On an intraday basis. So if I were just to look at one panel, I look for those areas that have high volume and contrast that with low volume. So if I'm looking for stops, if I'm looking for targets, my assumption is, and this is my experience, if I see a high volume area in two places, we call them points of control, competing points of control. My idea is when there's low volume, market doesn't want to be there today, right? The shift in the sessions, news happens, whatever it is, tends to accelerate through an area where there's no volume. The difference, though, what you're talking about is really not the case. And I heard it from my friend Robin Mesh as well, we were talking before, is this concept of filling in the voids, the volume voids. So it's important to understand that, look, back on the 4th, you have kind of this double distribution, and that area that you have no volume right around 72.30, 72.25, that area.
Yeah.
But that's an important level. That's an important area because we would expect some accumulation there. The market really wants to form this kind of filled out volume profile over multiple days. And when it sees a void, it actually tends to fill it.
This is one of these concepts that I've always felt with profile is explained, but not explained in enough detail. Because I was always told, it's starting off, market rejects low volume, it gets attracted to high volume, which I agree with on the whole. But when it gets there, and this is the tradable application of it, when it gets to those points, what then happens? And the way I try and think about it is if it's high volume, it's then likely to be low volume across the high volume. So if you take, for example, yesterday, where you've got this high volume, the VPOC of the day at say 73, 57, 60 area, you've also got it at 66. My expectation is if you're not going to do much volume there today, it does that in one of two ways. It either hits the level and backs off it. So you could play that as just a straightforward bounce away from the level.
Right.
Or it goes straight through it. And so at the end of the day, you'll have a profile with very little volume here if we trade through it, or very little volume here because that's the top of the day. So the attraction takes you there, but the time, it doesn't spend time there, which I think is the way it's often explained, that a market gets attracted, so you assume it sticks there. Whereas my view is it doesn't stay there and it will do very little volume there, and it's just the way it does that. The contrast there with, say, low volume, the way I always explain it to anybody is this has been created because this is a moment where buyers took control. They drove the market straight up with not a great deal of two-directional trading. I'm sure if you go and look at this on a 5-minute chart, a 1-minute chart, it will pretty much be a straight line move through.
Sure.
So what this shows you is buyers took control from, say, 72.19, because that was the previous limit of the upside. They took control and drove it higher. Right. After doing that, they then maintained control by effectively buying at higher prices and stopping the drop. So the reason for them thinking it's going to fill is, if you're a buyer, where are you going to buy? If it comes down here, you buy where you were strong previously, which is partly what caused the low yesterday, because that's where buyers then came in after the move. But if it breaks here, why are you going to bother buying it before it gets down here? You might as well step back and go, well, if I was happy to pay 60 and now people are willing to sell through me, whereas previously they weren't, why do I want to buy 50, 40? You might as well go to the point where you were actually able to control that move up. And so in doing that, if it doesn't find buyers here and is not rejected from the low volume, it then finds the buyers down here, at which point then it gets pushed back up that low volume. The other way I try and explain it is, if you imagine you flip the profiles on their side, an area of low volume is like a trough or like a half pipe. If you roll a ball into that, it doesn't bounce out of it. It rolls and eventually sits in there and trades within that area. Whereas the areas of high volume, think of it like a hill. If you roll a ball up it, if you roll it hard enough, it will go up and straight down the other side. If you don't roll it hard enough, it will go up and then roll back. Highly unlikely it's going to sit at the top of the hill, unless you're really good at rolling stuff in. That's for the good golfers out there, of which I'm not. That's the kind of way that I sort of conceptualize high and low volume areas. It helps manage your expectations. You expect a quick reaction if you're buying or selling 73.58 today. So you also expect it to get stuck in that lower area, which is what it's doing.
We look at that. We look at these points of controls as attractors, but not destinations. And that was probably the best explanation I've heard. You can observe something and not understand it. And that's kind of what I've thought about point of control. I just know it's not going to stop there. But, your explanation really drives that point home. Real quick question. We have a regular, probably one of our original viewers, 3 years on now, Anissa, asking, do you only plot on the regular trading hours, or do you also look at Globex overnight sessions?
So the way that I do it is I will plot regular trading hours for my profile. And then on a shorter time frame chart, what I will then do is draw a profile over the chart for the extended trading hours. So the idea there is I want to see what's happened in the overnight session, or what I'd call the overnight. My view on this, we have done absolutely nothing. So it's a completely balanced market.
Yes.
So if you've got a completely balanced market, it's got more scope to move. Very directional markets generally struggle, because what you've done is you've positioned people during that extended trading hours. If they don't get the continuation move that they want, then they roll over. There's a fantastic example of this. If you went and looked at the S&P the day after the Fed. So you had that Fed day, which was 18th, wasn't it? In the extended trading hours, you had this huge drift higher. And what that does is it then creates a gap on the regular trading hours.
Sure.
But it's a gap created because you've got loads and loads of people positioned long. Now, I spend a lot of time sort of thinking about how people positioned. Well, if you've got loads of people who've been buying it in the overnight session, they're inherently weaker hands, because that's where there's less liquidity. So what those people are hoping for, if you've been buying it down here after the Fed, is this is going to open, gap up and explode.
Right.
And when it doesn't and it starts to roll back, they're all going to run for the exits, which gives you then quite a quick open, fill the gap. It doesn't have to be a biggest of moves, but you're playing, because this was the open essentially, you're playing then for the gap fill and just the shift back to where the majority of trade was previously. That's right. The kind of play on those ones. I'd probably need to show it on sort of a 5-minute in the structure, but aware that time is running short. The other one that I said I'd touch on was the S&P today. Now, S&P has been a fascinating one of late because what it has done is actually constantly struggled and struggled and struggled up in this area. You see it over here, 26th, 7th, 30th of the month. Every time it got up into the sort of 58 10s to 20s, it struggled and it rolled away.
Right.
And you saw it again the last couple of days. It doesn't like it up here. What it helps you is, from a profile perspective, my sort of thought on this is I don't think the profile says what it's necessarily going to do here, but what it does tell you is what it needs to do, as in what it's doing today. It needs to get up, and rather than just sit here and build volume up in this area, you know, sort of 08, 13s area like it's done previously, it needs to show impetus. So these single prints out of the initial balance here are the bit that says to me, yes, this actually looks quite good for it today. So then my sort of application of this is, well, this has the potential to be a trend day. I would expect, well, it's done it now, it's reached the record highs on the futures, but I would expect then that these single prints should hold for the rest of the day, in which case we've got upside, which is effectively indefinable. You don't know how far this could go. And it's now a job of a classic trend theory on a profile. This will close very close to the top of the day, would be my expectation now. And the only thing that will change that is if we fall back inside those single prints and back inside the initial balance.
It's looking like it's complementing those 3 days back 2 weeks ago, roughly, where you had that volume towards the top end and it just couldn't keep going. You had that peak that had low volume, right? Maybe that was an all-time high back on the 27th.
Yeah, this one. Yeah.
And now our single prints are kind of where that volume was 2 weeks ago, but we're filling in that volume gap from the 27th, whatever day that is.
I think what it needs to build some volume up here, and that sets it for the continuation. The key thing now is building volume. And if it doesn't do that, it needs to spend some time here, which is what people hate. They're long and it's not going. It needs to do that. You know, think of it as taking a rest before the next leg. Once it's done that, it's ready to go.
Awesome. Richard, we've run out of time. This goes way too fast.
It really does.
It does.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.